Guess what, chicken butt? The stock market hit a fresh new all-time high as judged by the S&P 500. Didn't we just have the big down day? That's all anybody could talk about. Not us, of course. The big down day where the Dow went down 500 some odd points on Tuesday, 2 days ago. Funny thing is, it wasn't even a 2% down day. I don't think it was even, maybe it was a 1.5% down day. Since when is a 1.5% down day considered a really big deal? Some people just can't get used to the fact that 500 points today is just not your father's 500 points in the Dow. Let's roll with it. We'll roll a quick introduction. We'll talk about what happened, why a reiteration or a reminder of why we always talk about here on the show. Don't make these hasty decisions on a day's event. I said to you the other day, I've changed absolutely nothing about how I would invest, what I would do for clients. Nothing changes. We stick to the plan. And the stick-to-itiveness is really important. But if you don't have the right plan for you, then you're not going to stick to it. Isn't that what it's all about? Having the right plan for you? All right, let's roll the intro. We'll talk more about this. Please stick with me. If you have any questions about what we're talking about, please ask me in the comments. I love to hear from you. If you just want to say hi, that's all good. Give me a thumbs up. Let me know you're watching if you're watching the replay, because listen, this stays on my timeline even after we finish the show. And if I see your comment, I will respond to it. And what else? Make sure you follow us here on YouTube, Instagram, and here we go. All right. Welcome back to the show. Be the boss of your money. This is a show about teaching you so many things, but I want to share with you lessons that I've learned along the way as a financial advisor with over 30 years experience. And I have some pretty unique experiences. I've been in different kinds of firms, in different places, at different times. And I want to share with you how I've helped clients overcome challenges, how I've overcome challenges, and how my clients have figured out how to overcome their own challenges. And I was a lucky bystander just soaking up the knowledge. And I take all of this knowledge and I give it to you and I put it to work for my clients. If you want to check me out and if you want my contact information so you could reach out and call me or email me to schedule some talking time for a one-on-one, my contact information is at Client First Strategy. We're making some updates to the website, so please check it out. And hopefully every day for the next few days, you're going to see some new updates. ClientFirstStrategy.com. Why'd the market go up today? We just had this, I'm going to do air quotes, big down day. 2 days ago. Inflation figures came out slightly ahead of expectations, but it was more like a last straw that broke the camel's back for the day, because that's what it was. It was a one-day wonder as of now, just a one-day wonder. Volume, according to my partner Bobby, picked up. It picked up a little bit. It was a pretty good, I don't want to say huge jump in volume, but there was definitely some volume to it. always reason to observe. It may mean nothing. It may mean something, but it's just something to keep in the back of your mind when trying to judge the market. But what we really talk about here is we ain't got no time to judge the market. We have a living to make. We have a family to take care of, and we have a lot of fun to be had. And we like to say, your investments will take care of themselves if they're the right investments for you. I should put that on a t-shirt, maybe a cardboard sign. So we got the inflation figures, but that was on top of really strong labor figures, consumer confidence, retail sales. So there were just too many positives in the economic stats that were coming out to believe that the Fed is going to cut rates as soon and as quickly as it had hoped. So it finally gave reason for the market to go down after a pretty big run up in the last couple of weeks, especially in some of the mega cap tech stocks. So then yesterday, the news headline was the market has rebounded from its big down day. Well, listen, none of the major averages were down even 2% yesterday. I don't really consider it a big down day until we're like, 4 or 5%. That's a big down day. 1.5% down day, 2%. Well, a 1% down day gets my attention. 2% definitely gets my attention. But a 1.5% down day in a major average, it's not exactly a big down day anymore. Because if the Dow goes down 500 points, there are still some people who make a big deal about that. People who don't realize that the Dow Jones has gone from 5,000 to almost 39,000. So at this point, 500 points is a much smaller percentage of the market, which means 500 points ain't your father's 500 points in the Dow. You cannot invest directly into an index, but you could invest into a security that tracks or mimics an index. Hey, did I ever tell you that diversification is a strategy that we use to mitigate risk, but it doesn't necessarily protect your portfolio from going down in a generally down market? Did I ever tell you that past performance is no guarantee of future performance? All these little things that we work into the conversation. Today, we got news that retail sales was down more than expected. A lot of it is weather related. About half of it comes from automobiles. When it snows out and the weather stinks, people don't want to go out and shop for a car. So a lot of that is weather related. We do expect a rebound. However, it was enough to say maybe the string of economic stats that were too strong for the Fed's liking is finally given way. And we're going to start to see some moderation in the economy. The expectation still is that the economy by the beginning of the first half, so by July, should start to slow down, and then we'll start to get our expected Federal Reserve rate cuts. Whether or not it happens remains to be seen. But I know that living your life based on the latest economic statistic to send the market up or down and send you into a tizzy is no way to live at all. Just keep doing your thing, because if I told you on Tuesday when the market was down, don't worry, in another 2 days, we're going to be right back to an all-time record high, you might say, I can't believe that could happen. But it did happen. And once again, investors were thrown off, except for you, because you watch the show, and you know that we talk about this, that we don't react to the daily events. We don't even react to the monthly or yearly events. We just invest, we plan, we know what's coming up, we practice good personal finance, we invest according to your needs, your time horizon. When are you going to start taking your money out of your brokerage accounts because you're going to need that money to live on? Those are the kinds of questions. How about this? If you retire before the age of 67, but you want to collect Social Security, should you instead take money out of your IRA, Roth IRA, or sell out of your brokerage account a little bit to live on money, to live so you could avoid taking your Social Security so you could put that off until later? These are the kinds of questions that really make a difference to you. And the answers carries the day, not the Dow is down 500 points or up 500 or 300 or something like that. That's meaningless. It doesn't change a thing. What else? Okay, Ford. I want to talk to you quick about Ford, the headline. Let's just take a quick look at Ford. It's a big stock. Ford, it's not that big of a stock, but Ford CEO tells Wall Street to forget Tesla, says pro-business is the future of the auto industry. And it got me thinking, what's Ford really trying to do? This is a world where hardware companies, okay, companies that make things, companies that make technology or other products that if you drop on your foot, they hurt. The real experience, the real gains for the stock market are software related. Even though NVIDIA, it makes chips, it is still very highly software related. NVIDIA makes a lot of software also. But the rest of the lot, Microsoft, Alphabet, which is Google, Meta, which is Facebook, even Apple with the iPhones, they all want to be valued for services and software. That's what they're looking for. So if Ford could get the attention away from cars and money losing EVs, and if they could focus on the pro part of their business where they help fleets connect, manage inventory, because don't forget, as an automobile company, Ford is really good at managing inventory. So they've got some good software that they can sell to others. Ford, the bottom line is the reason their CEO is pushing the pro part of the company for fleets and connecting cars. And, if you have a fleet of 1,000 cars or more, it's a big deal because if Ford could get a software valuation, anything even slightly resembling a software valuation, the stock could take off. Right now, Ford, the PE ratio, which is just a valuation metric that we use to judge the value of a stock compared to others, is 11. But a good software stock could be 50 or 60 times earnings. So that's why Ford is pushing the pro part of the company, because it's software related. And when you look at that, you think, well, that's a different story than talking about the ICE cars, internal combustion engine cars, making a little bit of money in those. They're labor intensive, they're materials intensive, and then they take any money they make from that and they get to lose it on making EVs. How about tout the software part of the company and say, hey, this is how much we could make just on the software part. And if you value us on this, the stock is worth a lot more than where it is now. That's what that is all about. And I could see more and more companies starting to look at their own internal software that they've developed to help manage their business. I think more and more companies will say to investors, look at the software that we invented, that we use, and let's talk about that, because maybe you'll start to value us more as a software company. That's what that's for. And other, I think, important news, okay, is this one, okay? Money market fund assets see the first outflow since January. In particular, government bond funds, okay? That's funds that invest in short-term T-bills. Why is that significant? Because when investors start taking money out of money market funds, they're putting it somewhere. They're either spending it or they're investing it. Where does it go? Maybe it goes into stocks. Maybe it's already happened. But it's worth following those money market flows, because if investors start pulling money out of their money markets where they're craving safety and security for their money and stability, they could start putting that money into other places like the stock market or just in goods and services. It's a lot of money and it could actually have an impact on the economy. So it bears watching. The institutional government funds alone saw almost $9 billion of outflows in the last month. So we could see a lot more gains in the market because the money's going to go somewhere. So it's either spent and reinvested, or it's just spent on something, right? Anyway, that's the deal for today. I'm going to get going. I hope you guys have a lovely day. I can't believe it's Thursday already. I typically just do these shows Monday through Thursday, unless something crazy happens on a Friday. Then I'll be back here doing the show. Thanks again. Check out our website, Client First Strategy, and I wish you a very good night.